Hi YouTube, my name is WMBishop, also known as WMBishop on eToro. It's a bit later in the month than I wish to present this video, but here is my monthly review of my eToro portfolio for September. So here we are. In the blue column there is my benchmark, the MSCI World Index, as represented by the ETF with the ticker symbol SWDA.L. That was down by 8.27% this month. The S&P 500 was down by 9.34%, and my portfolio in the grey bar was down by 9.09%. September 2022 was a particularly bad month for the stock market. Based on market sentiment, sentiment was negative throughout the month. That was a sharp decline for the S&P 500. I outperformed the S&P 500, but underperformed my benchmark. Now, I'll repeat what I say every single month, that successful investing is achieved over the long term. We should not fixate too heavily on short-term monthly movements, and returns over 3 to 5 years are far more important to look at. In the short term, stock market returns are driven by market sentiment, whereas over the long term, the increased revenue and increased earnings of companies drive the share prices. So let's have a look at those monthly earnings. 3 of the companies in my portfolio reported earnings this month. Ashtead and Copart reported both revenue and earnings growth. Ashtead is an equipment rental company based in the UK, with the majority of their revenue coming from the US. Revenue was up 22% for the quarter. Earnings per share was up 31.7%. Earnings per share increased greater than revenue because of a reduced share count, and the operating margin also increased and is now 26.3%. Ashtead is a growing company in a fragmented but consolidating industry. Copart is primarily an online vehicle auction website. They purchase mainly from insurers and they sell to consumers all over the world. Revenue was up 30% for the quarter. Earnings per share was up 15.9%. So earnings per share went up less than revenue, and this was mainly because of an operating margin decrease. And although it decreased, it still remains high at 39.3%. Copart has strong return on invested capital of 25.1%. This far exceeds their cost of capital, and so they continue to generate profits and value for their shareholders. Nike was the third company to report, and they reported growth in revenue but declining year-on-year earnings. Revenue was up by 3.6%, which is not a lot, and earnings per share was down by 19.8%. Revenue and earnings did both beat analyst expectations. The earnings were down despite a revenue increase because Nike finds itself currently with a lot of inventory, a lot of stock that they need to shift, because a lot of their apparel, it's only going to get its full resale value over a certain period of time. They've got a lot of it at the moment because of supply chain problems during COVID, and so they need to shift it. While they shift their excess inventory, we're going to see a hit on operating margins. However, Nike also have a high return on invested capital of 20.3%. They continue to generate value for their shareholders. I first bought these shares around $12. They're currently $90 a share. They are down heavily this year, but they still remain a great company. They're the world's largest sporting goods manufacturer. Now, this is the page where I report my top 3 gainers for the portfolio in September. And I did mention that September 2022 was a particularly difficult month. Top 3 gainer screen is blank. There's not one single investment in this portfolio increased in price in September. So I present instead my top 3 performance for September. Monster was my best performing company. That was down by 2.1%. It happened to be one of my worst performers in August. So because of the strong decline of 10% in August, it was only slightly off in September. Much of the selling of Monster appears to have been completed now. Tegna is an acquisition target. There is a takeout offer price of $24. It's currently being reviewed by regulators to be approved, and so the Tegna share price doesn't move too much. It was one of the top three gainers last month. It remains one of the top 3 performers this month because the share price doesn't move too much. Ashtead, which I mentioned earlier, had great returns on revenue and earnings per share. That was down by 3.9%. It also lost 7.4% in August, but is up by 18.8% since the end of June. Portfolio changes for the month. I did not buy or sell any companies this month. I'm currently looking at buying more companies. At the start of the month, the cash balance on the portfolio was 8.2% of my invested capital. And I'm continually monitoring share prices as they're falling because there are some great companies on offer, in my opinion. I'd like to talk to you about what Warren Buffett, how his approach to investing is during a bear market, because I understand these are challenging times for investors and some people are nervous. This is a direct quote from Warren Buffett. If the market gets cheaper, we'll have many more opportunities to do intelligent things with money. We're going to be buying things for as long as I live, just like I'm going to be buying groceries. Would I rather have grocery prices go up or down? I'm going to be buying groceries tomorrow and next week and next month and next year. The answer is, obviously, I will do better if prices are lower. We don't spend any time thinking or talking about what the stock market is going to do because we're not operating on the basis of any kind of macro forecast about stocks. And if you can buy very good businesses at attractive prices, it's crazy to say, I think I'll sit this out because I think it might get a little cheaper next year or something of the sort because the world's going to go to hell. I use the exact same approach that Warren is talking about here. Some companies have gone down in price. I have cash available to invest. I'm not concerned about what interest rates are going to do, what the inflation rate is, what a country's GDP is, any kind of those macro things. I don't give much thought to them because that's not the basis of my investing. I find companies with high operating margins, high gross margins, high returns on invested capital, high returns across the business. And if I can buy them at what I believe is an attractive price, I'm going to buy them. They may go lower from that point, and if they do, then I'm going to buy more because I'm getting an even greater bargain. But over time, those share prices in those superior companies, I believe, will go higher. And so that is how I'm staying calm during a bear market. That is why on this screen you will see nothing under the sold list because my companies, they're on sale at the moment. Not a good time to sell them. So here's my outlook. I'm going to continue to invest in companies with superior fundamentals and competitive advantages in comparison to those in the wider market. Looking ahead to October, there are 11 quarterly earnings reports being released by the companies in my portfolio. It's certainly a busy time on the earnings front. I'm going to continue to invest the cash balance that is built up largely due to the deposit on the 1st of July. So yes, the cash balance at the start of September was 8.2% of the portfolio. It's now 8.5%. I have more cash available because of dividends during the month. We received 9 dividends, and I'm ready to invest some of that capital. So there we are. That's my review of the portfolio for September 2022. Now, none of this should be given as financial advice. All companies mentioned are companies that I own. You should be aware of that before you make any decisions. If you are unsure of anything, please seek the advice of a suitably qualified financial advisor. If you enjoyed this video, please click on the subscribe button, hit like, and message me in the comments below, and I'll get back to you as soon as I can. Thank you.